Hey everyone, and welcome. Today we're going to unpack one really dramatic day on the Indian stock market. It was a day when the country's celebrated tech sector basically hit a wall. So let's find out what happened and, more importantly, why it all matters. Okay, so this is the number that really tells the whole story, minus 3.89%. On April 22nd, 2026, the Nifty IT Index, which, as you know, tracks India's top tech companies, just took a nosedive. We're talking its steepest decline in a month. And this wasn't some minor blip, no way. This was a full-on, sector-wide shockwave. So the big question is, why? Why did this happen? Well, this wasn't just some random dip. It was actually a story with a very clear starting point, a dramatic chain reaction, and some really powerful global forces kind of fanning the flames. Right, so the chaos really began with just a single crack in the market's foundation. And that crack, it came from one of India's biggest, most watched tech giants. And that giant was HCL Technologies. Its stock absolutely plummeted, closing down over 10% for the day. I mean, a drop that steep is just brutal. So what on earth did the company say to trigger such a massive sell-off? Well, the panic wasn't really about what had already happened. It was all about fears for the future. HCL put out a warning that for the next fiscal year, they were only expecting revenue to grow by, get this, 1 to 4%. That was way, way below what investors were hoping for. The company pointed to weaker demand from telecom clients and some project delays, and that super cautious outlook, it sent a shockwave of panic right through the market. See, HCL Tech's bad news didn't happen in a bubble. It acted like a virus, spreading fear across the entire IT landscape. All of a sudden, investors started asking themselves, okay, if HCL is struggling, who's next? And that chain reaction was immediate. I mean, look at this. One after another, the titans of Indian tech just tumbled. Tata Elxsi down over 6%, Persistent Systems down almost 5%, and even the absolute giants like Infosys and TCS couldn't escape the fallout. Investors just started dumping IT stocks, terrified that HCL's problems were a sign of a much bigger sector-wide slowdown. And the experts on the ground, they immediately confirmed this feeling. One chief investment strategist, VK Vijayakumar, pointed out that HCL Tech's weak commentary was the direct trigger for this whole reevaluation of the sector. The fear was real, and believe me, it was spreading fast. But here's the thing, the IT sector wasn't acting in a vacuum. It's so important to understand that all of this was happening inside a perfect storm of global pressures that were already making investors incredibly nervous. Yeah, the conditions were just ripe for a sell-off. For one, the market was already kind of due for a breather after a 3-day rally. But then, at the exact same time, you had new geopolitical tensions in West Asia pushing oil prices toward that dreaded $100 mark, which in turn was weakening the Indian rupee and spooking foreign investors. It was just a cocktail of bad news. Okay, now this is where the story gets really fascinating. Because if you looked away from the big tech names on this day, you would have seen a completely different picture. Not everything was falling. In fact, some parts of the market were actually doing great. You can really see the market's split personality here. While the big company Nifty 50 index was down and the Nifty IT index was just getting hammered. Look at the other side. The indexes for mid and small size companies were in the green. So what does this tell us? Well, it tells us that investors weren't just running for the hills. They were shifting their money. Sectors like energy, consumer goods, and real estate, all of which are tied really closely to the domestic Indian economy, showed some pretty remarkable strength. This suggests a strong belief in India's own internal growth story, even with all this global uncertainty swirling around. So, what's the big takeaway from all this chaos and contradiction? What can we really learn from this one single turbulent day on Dalal Street? Ultimately, this one day signaled a major shift in investor thinking. It seems like they're getting more cautious about companies that depend on global spending, and at the same time, getting more bullish on the growth story happening right here in India. It's a pretty clear pivot from the global to the local. And it leaves us with this final, kind of provocative thought about one of India's most important industries. I mean, is this 2-decade-long boom for Indian IT services finally facing its biggest test yet? Or is this just the start of a new, maybe more complex evolution? So that's all for this breakdown of a very, very revealing day for the Indian market. If you found this useful, please do take a second to like, share, and subscribe for more explainers just like this one. And now, we really want to know what you think. Is this just a temporary blip for Indian tech, or is it a long-term shift? Drop your take in the comments below. We'll see you next time.